After World War II, the government was loaded with debt, just like today. But how did they fix it back then? They didn't exactly pay it off. Instead, they slowly lowered their debt through something called financial repression. Basically, they kept interest rates artificially low, and they encouraged inflation to eat away at the value of that debt. And then they gradually shifted the burden back to the private sector over decades. Now, the government successfully got out of that mess by shifting somewhere else, but it took a really long time, and it required huge economic adjustments. But here's the problem for us today. We solved the debt in the 1940s because we had room to lower rates, to boost our economic growth. And the country had strong demographics, none of which we have today. Inflation's already a big concern, and interest rates are actually going up, not down. So yes, we can see clearly from history that these debt cycles have happened before, but we're now facing a very different set of circumstances where the tools that we use to get us out of that situation are already being used today. So clearly the system is strained. And the trillion-dollar question is, what's the best thing that I can do to protect myself against all of these different economic outcomes? And that obviously depends on person to person. But for me, at my age, at my risk level, at my current situation, I just buy the US stock market via an ETF called VTI because I think it stands to profit no matter what the outcome is. But if all of that is wrong and we're going to pivot into a new economic system, I also buy Bitcoin because it stands to become a lot more valuable if the assumption is we try to print our way out of it by printing more base units to increase our base monetary supply. But I also own real estate, and I have some cash on the sides just in case everything else fails, and maybe there's some opportunity. But each bucket of my net worth represents anywhere between 20 to 25%, and that's how I'm personally playing this out. Obviously, that's not necessarily going to work for everyone, but that's my approach. And I think at this point, not owning any hard assets is more risky than owning them. And by hard assets, I'm referring mostly to things like gold and Bitcoin. My hard asset of choice is obviously Bitcoin, but it's not for everyone.